Good afternoon, this is Ron Brown. It's Friday, the 18th of February, 2022. I'm going to do my weekend market report because I don't think I'll have time tomorrow. Anyway, it was a very rough week, but before I get into that, here's the standard risk disclaimer. And if you pay attention to these two lines down here in particular, any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Now, I try not to emphasize anything, but if I happen to point something out, it's up to you to determine if you want to follow up and take a trade. Let's get started here. I have thinkorswim up here, and what I'm going to do is, before I get into thinkorswim, going to do a final intraday update. I'm sure it's all current, but I want to do this, and then I'm going to turn off the automatic updating. Okay, and then I'll go under intraday, and I hit the wrong thing, didn't I? Intraday options, manual, update. So everything is current. And before I get back to thinkorswim, what I'm going to do is go into my market analysis user groups, and I'm going to go to HGS major industries only, and I will go up to the tools, and I will select rebuild indexes and group. So what this is doing is taking the information from the stocks that are in these major industries, and it's updating everything with the current data. I'll just let that run, and let's get back to this. Now, this is the composite, as you can see, the Nasdaq composite. This is what happened this week: Monday, Tuesday, Wednesday, Thursday, Friday. In other words, we lost ground again. Very volatile week due to inflationary pressures, but probably more than likely from because of what's happening in Ukraine with Russia. There's just a lot of factors going into this, but fear is taking over. But the fear is not being represented by excessive volume. This chart does not have volume, but if I go to this layout here, if you look over here, these bars represent the Nasdaq volume, and you can see this week that volume is low every day, a little bit higher today with monthly options expiration, but low volume compared to a lot of other days recently. Last week, you can see the volume was much higher. I'm going to restore this now. Let's go up and look at the NYSE volume. Higher today because of options expiration, but the other days, nothing special as far as high volume. And with the market selling off like it has been, I would think that volume would be higher. As I mentioned in my on my Nasdaq chart this morning, it's either complacency or just denial and hope that the market's just going to turn around and go up. We don't know that, obviously. Here's advancers versus decliners, minus 790 on the NYSE and minus 1621 on the Nasdaq. So pretty brutal. You can see the rally that happened late in the day, and then it reversed and closed down, not at its bottom, but more than halfway down from the rally. So looking at the Fibonacci, here's where I drew the first line, the high, the low. When it rallied, it managed to get up to in the 40s, 40-some percent retracement, but here we are closing down around probably around 15% now off of this low. While I'm in here, let's take a look at the S&P 500. And you can see that it fared a little better. It's a little stronger. It's up around the 23.5 1.6 level, around 23% right now. So the real weakness, as we all know, has been in the Nasdaq composite and the Nasdaq. But you can see that there's been plenty of weakness here too. Now I'm going to go back to the comp. I know I've got it here. There it is. And let's just go back. Let's look at a weekly chart. On the weekly chart, we had this long run series of, here's a low. Well, it took out this area here and established a higher high. Then here's another higher high, higher low. More higher highs all the way up, higher lows. This was about the same level, but this low was higher than this low. And then it broke out, established a higher high. And we did this for a long time, but since then, and this is a weekly chart, came down and established a lower high right in here. Couldn't get back above this high, and then here's a lower low that it was established right here. And if you consider this a high, this is a lower high. Well, here's a lower low here. Here's a lower high. Now the question is, are we going to form another lower low? I think if we break this support area, it's going to fall pretty hard. But we're a long way from there. And like I said, there's a lot of complacency yet in this market. If there weren't, we would be seeing a selling climax where money will pass from the people that just, the traders, the funds, the people that just can't stand any more losses, they just bail out. And we'll see a huge volume spike, and then buyers will buyers are stepping in at that point, and then we would see a reversal to the upside. This is classic volume price analysis that I'm talking about. It worked 100 years ago, and it continues to work today. For now, we're stuck in this area right here. The Nasdaq is stuck in this area right here. It's really not giving us a clue as to future direction. It's just bouncing around. But at the same time, there have been some tremendous losses especially in tech stocks, and I'll try to take a look at that in HGSI. I'll give you a couple of examples. Here's Nvidia reported earnings yesterday. They were very strong, and look what happened. It gapped down from the prior day and tried to hold here. It gapped open this morning, but selling pressure took it down. It's down to, well, here's the high, 346. Got as low as 209, and the current price is 236. Now this is Roku, which reported today, and you can see that it was not well received. There's a huge gap down, but buyers came in to support it after it gapped down here and traded as low as 102.60, and then buyers stepped in. Now look at the volume. This could be considered it's a potential volume climax. If you look up here, it says stopping volume at low indicates downtrend in likely. Likely is the key word. It may not be over, but it's likely. This is classic volume price analysis. And watch it next week on Monday, see if it bounces around and volume goes quiet, and then if it starts to build some momentum to the upside. It could just continue to go down, but initially the buyers or the holders were very weak. Fear set in when it gapped down to here, it traded down, and then buyers who think it's been overdone, the so-called smart money, stepped back in and started buying. Get out of thinkorswim or minimize it. I'm going to go into HGSI, and what I have here for those of you who have the software and are members of the Insider Club. I'm in top-down process views for ETF analysis, and I'm on the scorecard intraday. End of day will be after it's updated tonight. Here's intraday. You can track this intraday, and you can see where the strength was. Look at this. The TLT was actually up today, so maybe the thought of the rate increases have been a little bit overdone, because we've seen a rally here for the past couple of days. Now I'm going to bring up another chart. I think I have another one open right here. This is a plain chart as far as just the candles, but also I've added the VPA and the VPA information up here. This is all accomplished by editing the indicator and selecting display VPA analysis in the upper corner and draw VPA flags on the chart. And you can see that on the TLT there were some excellent calls. Now this is what I mean about stopping volume here. It can continue to go down. This is a stopping volume VPA flag. Get this crosshair off of here and get an arrow here. You can see the circle, and then there was also another I believe that's a low volume test. I'll check that here in a minute, but no supply here. And then here's a low volume test right here. Notice how the volume really fell off, but this closed in the upper part of its range. That means the selling pressure was coming off, and what happened? It gapped open the next day, and it's been up a couple of days in a row. But also notice that the volume is very light on this. Now this is the same information, a daily chart, but here I have the 3 and the 6 moving averages to help me with direction. These are bingo indicators. They're oversold indicators. Been oversold for quite some time. It was oversold here, but it rallied for a short while. Now these are, of course, here's the volume in a 90-day line, and this is the expansion contraction, or the 3 and the 6, and you can see the 3 went above the 6 today, but the 6 is still below the 18. But the volume point of control passed over yesterday when it went from rose to green. So that signifies that the bulls were beginning to retake control. Oil was up today, which is no surprise. It's been trending strongly, as you can see, for quite some time now. And we're all feeling that pain at the pump. Now I want to point out on my scorecard, these Wyckoff volume indicators were from last night, or from yesterday. So the volume was above average, the spread was below average, and it closed in the middle. And you can see if I click on this right here, yesterday's candle, that same information is here in the chart. Now to get the current information, you just click on today's candle, and it's high, wide, and very high. So what does that indicate? It indicates demand. All of this ties into volume price analysis. Every indicator that I've got on here, the VPA indicators and the Wyckoff indicators, and these columns here represent crossovers on the 3 crossing the 6, up and down, and the days since the volume point of control went positive, or the days down since it went negative. A lot of information here. You can do great analysis with this program that you can't do with a lot of other programs. Everything's right here in front of us. So let's take a look at this. Oil was up, tips were up, commodities were up, the VIX was up. These are the ranges where they closed. So the bond shares were closed at 92% of their daily range. And going down here to the bottom, what's at the bottom? I have the ARK funds in here since so many people follow them, and you can see that they got hammered once again. Look at these percentages that they're down, and look where they closed within their daily range. Looking at this, you can immediately tell it's a risk-off day. If you just came and sat down at your computer and brought this up, the risky ETFs are all down near the bottom. And where's the money going? Treasury bonds, oil, etc. I'm going to take a look at ARKK, since that's the one that's talked about the most. I'm going to get it up here and let's zoom out a little bit. I think this was a high back here. Now this, for those who stayed in or were buying in up here, this has been a disaster, as you can see. If I bring up my toolkit here, that isn't what I want. Clicked on the wrong thing. Annotation tools, and just click on this line here. Go from the top down to today's close. The loss is 94.5% over 256 periods. So all of these great gains were wiped out. Now what would we have to do? What would this have to do to get back to this level here? I'm going to hold my shift key and draw this line across and then go down here, click on this and put it there. So if we look at this, it would have to go up 146.2% approximately. This would have to gain 142% to regain where it was at this point. Investors that claim that they're long-term investors are just foolish for letting this happen to them if they did. Yes, there have been a lot of waves up and down, a lot of buying and selling along the way, but at this point right here, when it's broke this low, I'm going to bring this back up here, hold my shift key down, draw this over here. When it broke that low and formed a lower low, you can see that it's been lower highs and lower lows all the way down here. Also, look at all the volume, how the volume has increased from this area or even this area back here. A lot of volume. There are investors, traders wanting to get out and those wanting to get in, trying to pick the bottom. Okay, I'm going to get out of here. Let's take a look at where it closed today. Alternate eye will bring this up. Close is 64.80. And going back up here, 216.21. The close was 155.12. Anyway, don't let this happen to you. Take the short-term pain, and the short-term pain is a lot easier to take than the long-term pain, believe me. One more thing, I'm going to click over here on the last day. Let's go up here. You can see that all the trends are down. These are the volume price analysis trends, or best fit trends. Volume was high, the spread was below average, and the close was down. Now I'm going to zoom in on this. Let's look closely at this. Here's the stopping volume. You can see it stopped at just temporarily on that day, and then it bounced around, went lower, but let's see, it didn't get on this one. It got lower right here, and then there was another stopping volume, and that gave the ETF a bounce, but it didn't last. And then we started getting a bunch of negative VPA flags here. Both positive and negative, I should say. But this one right here, what does it say? A down bar closing after a pseudo upthrust confirms weakness. This is a pseudo upthrust. This is a pseudo upthrust. And what happened here? This is a low volume test, or a test for supply. It's a white one. It's Not as powerful as these magenta colored tests, just an indication that volume had fallen off and it didn't close in the upper part of its range. When you look for these tests, make sure that the stock or ETF is closing in the upper part of its daily trading range. Those are more powerful. This is a confirmation. Didn't work out. Just overwhelmed by the market. I'm going to put the crosshair here at the close, and you can see that this is a new closing low right here for ARKK. As I said on our Skype board on the for the people that use HGSI, last year's guru is last year's guru, and remember that. Just because they did well one year doesn't mean that it's going to continue. Okay, let's take a look at some other things. I've talked about this long enough. I'm going to go into my designer. I'm going to rebuild the user smart groups. I've got several in here, so it takes about a minute to do it. And after that finishes, I'm going to take a look and see where the strength was today. Okay, need to go to a different warehouse view. Get out of the ETF views and go down to my daily prospecting folder. Let's look at the intraday. These are stocks that are assigned to industry groups. Here in the designer, the user smart groups are down here now. On the intraday market indicators, I have these folder stocks and groups moving up and down intraday. S&G up intraday. I need to take the filter off. I'll hold my shift key, click on that. This pulls up 100 stocks that were up for the day. This is all of them combined. This is the 1 to 15 group. So if I click through to the warehouse, make this full screen, you can see that all of these stocks were up today, and some of them were up quite a bit, even on a terrible day. Now you can run this anytime during the day to see where the strength is. And if I click on this, you can see there's biotech, PC, insurance, banks, and so on. So it's always possible to do intraday prospecting and potentially come up with some trades. Now normally what I do another thing in the designer before I get to this point. I go to the reference groups, I go to the industries, click on that, select tools, rebuild indexes in group, and it's rebuilding all of the industry groups. You can do this anytime during the day so you know exactly what's happening in the market. Okay, they've been rebuilt. Now if I sort on the industry percentage price change one day, you can see that there weren't many industries up today. Paper, automotive wholesalers, other consumer products, restaurants, household products, PC insurance, and the rest of the groups were down, but the stocks were up. Now to know what the stocks were doing during the day, which were the strongest, all you have to do is look at this intraday percent range and look for stocks that are obviously green and hopefully in the 90 range. Let's take a look here at a couple of conservative stocks, Campbell Soup and Kellogg. And I'll zoom out on this. So what do we have today? We have an effort to rise on heavy volume. Look at the volume spike here. Demand's coming in as the market becomes more uncertain. Let's bring that other chart up. I've got it here. Use the daily chart here, and you can see that the 3 crossed the 6 several days ago. Right here, as it was generating bullish VPA flags. It hadn't done much today. Today it moved up. Yesterday and today, pocket pivots, volume point of control, positive, and the 6 crossed the 18 today. also. Let's take a look at Kellogg. Probably a similar chart. Well, this one came from down here in the 6150 area. This was really a hard sell-off. The 3 did cross the 6 back here, though. I'll bring this up, put a crosshair on it. You can see where the 3 crossed the 6. There were some dojis in here. Oversold area, the bingo bars. Here's a, let me put this on here. Edit the indicator. Oh, I hit the wrong thing. Sorry about that. Volume price analysis, display, VPA flags, and this up here. So down here, that was strength seen returning after a downtrend. And that pretty much hit it right on the bottom, or close to it. I'm sorry, it didn't either. It was the next day. But you can see a doji here. This is uncertainty. And there was a gap up. The next day traded down, and it really has had several nice days here as the market continued down, especially the tech stocks. Where's money flow into stuff like this? But the point I'm making is these can be generated any time during the day. Let's do one more here. I don't want this to become too long. I'll go down to this one right here. Stocks and groups moving up 1 million. And stocks and groups moving down too. I don't want to neglect that. These trade at least 1 million shares. And you can see, well, what do we have in here? Biotech again, but specialty apparel stores and banks, packaged food. This is great insight during the day, and it is here throughout the day. You can generate these anytime. Markets shift throughout the day, but usually it seems that when a group starts moving during the day, it will oftentimes hold. I'm not going to say it does all the time, but you can certainly come in here and find some prospects, and then you can take this list and you can apply other scans to it. Let me just do this very quickly. Like I said, I don't want this to be too long. Let's go into the I'll just go down here to the undercut and rally, and let's see ones that were setting up. You can see undercut and rally. The 3 was below the 6 yesterday. This is a weekday, but a week WEAK. But these stocks are going up, and you can see that they closed in the upper part of their range. Let's just look at Consolidated Edison. Look at this. So this stock was found. Of course, the market's closed now, but it could have been found during the day, and it would have been in this screen, which is the undercut and rally, flags or candles, fan up. The 3 was below the 6. Now, if I look over here, you can see what happened. Did it cross? No, it's right at it. It doesn't. Yes, it did cross. There's a little bit of a histogram down there. But this is how you can find these stocks during the day. You just generate those smart groups, and then you come in here and apply the other filters. Let's look at one more. Church and Dwight. Downtrend. White candle yesterday. Effort to rise today, along with high volume up bar closing indicates strength. Did this cross over? No, but it's very close, and the point is it was showing up through this screen. Okay, one last thing, and I'm going to end this. What I'm going to do is go into my user groups, my market analysis user groups. Remember, I re-indexed these earlier in this presentation. I'll take the filter off. Let's just look at the broad market. Let's do the 1500, which contains the 500, the 400, and the 600. Make this full screen, then I'll quickly flip over to my HGS charts. Let's look at the percent of above the 20, 30, 50, and 200-day moving averages, and you can see that look at the percent above the 200-day moving average is very weak here. I'll use my alternate I key, bring this up, and this gives the percentages above these moving averages. It's not terrible. It's been a lot worse back here. I'll put the crosshair on. Back at this point, it was the percent above the 20-day was only 8%, 8.11%. Where are we now? We're up at 47.05, so not too bad. Remember, I'm doing the S&P 1500 here. So the percent above the 30-day moving average. 35%, what was it back here? 14.16%, so not too bad. I mean, as weak as the market has been, broadly speaking, it's not too bad. But if I go to a different index, like the Nasdaq 100, you're going to see that it's a lot weaker. We're dealing with 100 stocks, and they are not doing nearly as well. These are the big tech stocks. So I want to go back to the S&P 1500 just for a broad look at the market. And then I'm going to go to a different view here. Okay, let's look at this one. Advancing 37.5, declining 61.72. This is today, so 546 up, 898 down. 352 more decliners than advancers for a 0.61 ratio, same number. The advanced decline volume was about even, 89 new, or 0.89 percentage of the new 52-week highs, less than 1%, and about 5% 52-week lows. All this information is very insightful if you come in here and take the time to do it. This is the advanced decline line. You can see it's kind of been all over the place. Headed down today. We're getting negative pocket pivots today, but you know, we're still well off the lows on this index. Okay, one more and that's it. I'm going to end this, and this is what happened yesterday. You can see how choppy this is back here on this day early this week, Monday. It was a buy signal. VPOC 1010 was up. The force indexes were up. It was a 5-to-1 day, at least a 5-to-1 day on the advancing versus declining end. The same for the volume. That just reversed yesterday on Thursday. So it's on a sell signal now. No doubt about it, risk is high. You just really have to be careful. I'm going to put a frame around here. This is the kind of market we want right here. Nice and steady. At base, nice steady run here. Then it rolled over, and it's really been choppy since. But we do get these periods, and this is where it's safest to invest, and we're far from that. Look at the chop here compared to here. I'm going to zoom out on this. And you can see really, and you know this, I'm not telling you anything here. But these are the markets where it's easy to make money, or a lot easier to make money, because they keep going up and up, higher highs and higher lows. You can see it kind of stalled here, then it broke out, and it consolidated here for a few months, and then we had that nice run right here, and ever since then it's been chopped. But guess what has happened during this chop? There are always opportunities. This is the oil and energy stocks have been on a tear during all of this. So this is what's great about HGSI. We can look at the overall markets, and we can go into the sectors and see where the strength has been. I said I was going to quit. I promise I'm quitting after I do this. Go back up here. And go into the ranking module. I'll do this for 4 weeks. Look where the strength has been. Energy, materials, financial. The others have been hit over this time period, but there were tremendous opportunities in the energy index, and it was all pointed out using this program.